Welcome to the Become Sensible podcast, where we discuss practical accounting, finance, and tax for everyday business. I'm your host, Fiona, and I'm here to show you that no matter what your business financial situation is, you can change it. Good morning. Thank you so much for tuning into the podcast Become Sensible. So today we talk about a very important topic for your business financial management tool, that is budgeting. And I know the word budgeting may make you feel some limitation and constraint. But like a couple days ago when I read people say think out of the box. But in creativity, you actually need to have some kind of box and limitation so your creativity can spark. So I think it just become like a point of view, a perspective. So that is why budgeting is not how the way that we limitation or constraint in the way that we grow or build our business financial, but it's just basically the way that we we assign the task for our business money, how it look like. For example, normally when you start with the strategy on the top, and then the next step is the business plan for the next year or for the launch of a new products or a new event. That is where you set up the budgets. Budgets play the role in the way that you assign the task for each money, how you allocate your expense so that you can carry forward the strategy that you have in the first step. And so that is why budgeting play a very important role in your business financial management. So let's talk about why the budget is very important. Budgets, based on the survey from Zeros in 2023, any business, 89% of business who are using the budgets and budget software feel more confidence and control in their finance. And so that's just why it's a very important thing that we talk about today. So let's dive in. What is actually budgets? Budget is just about giving your earning money or your money, your fund, a game plan. It's just like you drive and you have a GPS on your car that gives you the direction where you go in terms of how you allocate your fund moving forward with your company and your business. How many of you feel like it's a little bit intimidating when you talk about budgets, how you actually think about and how to do it? Don't worry about that. Today we will talk about the step, how you can do that. There's couple type of budgets. Number one is operational budgets, which normally people do it toward the end of this fiscal year, this year's, and they plan for the new year. That's called annual operating budget plan. That is everything flow from the department and plan for the whole company in terms of how its operation revenue is spent for the whole year next year. The second is cash flow budgeting, is basically like the cash flow management forecasting. And then the other one is capital expenditures, depends on the industry, like some industry that they need a lot of capital expenditures, like buy equipment, build a plant and all of that. So today we talk about annual budgets, and I think it will be super helpful because it's applied for many of us, many of you that in small business or startup that grow the business. And the principle is almost the same way, so you can use this for other type of budgets. So number one, when talking about the budgets, the first step is, what is your goal? For example, if you say next year you want your revenue increase 30% or your profit margins increase 20%, or you say that you want to have a 3 launch products or events or offerings, that is your goal. And you set up a strategy. That is your target. So that is the whole company strategy for the next year, based on your strategies are. And then now the step number 2 is look backward before you move forward. And this is why very important in terms of financial report. you need to have a financial report on hand, your profit and loss, your balance sheet, your cash flow, because these three financial report, it gives you the pictures. What have I been doing? What's happening in your business in last year or in the current year? And that's give you a very good data and financial picture for you to like prepare to move forward with the place that you want to like make an improvement. If you want to increase your revenue, where is the place? And if you want to cut your expense, where is the place that you can do those things? So historical data and financial report is very important play in that role. And then now you start to get the input. The input normally is come from the department, or like if you don't have a big team that have a department, you have the team, like marketing team, sales team, the customer service team, the operation team. These people, they work a lot like closely with your clients, your customer, and they are more in the field, so they also have a like a very great like on demand current info, just in time information that you can use this as the way that moving forward for the company. And the other thing is, when you do this, you also need to get like the information about market trends, the market research, like consumers spending on the markets. You also need to get the information about the macro economies, like how is the inflation look like, how is the government money policies look like, and these things, because it's all affect your customer and clients in some way. Because like if inflation is very high and interest rate is very high, there's so many other things that people need to take a priorities in their spending. And that would affect in terms of your product and service, unless your product or service is like necessary, like utility or waters, like basic needs. But then most of the time is frustrate and fluctuating depends on like the macro economy too. We all like play a part in that macro economy, and all the big policies were it will affect us at like small business or business owners in some way. So make sure that you take into account this information and data. Just make sure that, okay, if you project your revenue will grow 30%, it needs to rely on some of like what is the assumption that you put in to say like because the consumer spend more money in the next year because reason A, B, C, D. That is where your assumption is. Basically, like if we do the budgets, it need to have some kind of data back. Basically, how people like are spending the money, the saving rate, the consumer, the preferring, grow in spending of the customer, the clients. Does help you like make your budgets become like more realistic. I don't mean that we cannot like have a like high expectation of the revenue or like cut the spend and all of that, but we play a part in the economy, and this is why sometimes like very high expectation in terms of the budgets, this can have you feel discouraged or your team feel discouraged moving forward. But of course, it all depends on the niche and the industry and the target customer and clients segment that you serve, whether they have like influenced by the pricing, the economy, whether they elasticity with the pricing. So that's just all those things take into account of it, so you can get the input to prepare for the budgets moving forward. And from there, you start to like, okay, drop in terms of how much is the price, how much is the quantities. Based on that, you budget the revenue for the business. And then after that, estimate your spend. This is give a lot of feedback from your team. Like for example, they say, okay, the marketing team need to have like $200,000 for next year to do the marketing because revenue will have some kind of correlation to your expense. Because if you say like you want to have the revenue increase 30%, but to drive that demand 30%, what actually activity and strategy that help you to drive it? And normally when you have a that on the expense side, it needs to have a certain kind of like spending to try that revenue. But of course, it's not all spending create equal. So that's depend on like how creative is your team, how solution oriented is your team on. But it's always this kind of spending. Maybe that's to hire more people on operation team, maybe hire more people on the marketing team, maybe hire more people on the sales team. Maybe you need more technology and software to help you support for that. So it's always like revenue increase, each certain part of your spend also increase, but it's not like the same percentage and the same rate at all. So that is what it is. And then like big purchases need to put it in detail. And then from there you drop together from each department or each team put together, and it's all consolidated into the main one is called the master purchase, that you have every single line apply how much is revenue for each product or service that you sell and how much is spent like direct cost, cost of goods sold, and then like operating is spent. That's including like personnel, payroll, rent, and all of the expense that normally it go into your financial report. And once you do that, now people have the thing is called like a meeting to finalize the budgets. That is some of the company that have a bigger team, they have a thing called top-down budgets and bottom-up budgets. So top-down budgets is basically like the managers or the leader of the company make the decision like, okay, this is the revenue that we aim for next year, and then this is the expense that how it look like. But sometimes that is from the leader point of view. But the people from the team, from the department, they have more information from the market than the leader because they day-to-day transaction that I make with a customer, with client and all of that. So they have more data on it. So it's called the bottom-up budgets. And normally at this time, you need to meet together, like from the leaders, meet with the department, and they negotiate in terms of, okay, what is the thing that they think is reasonable for the company to move forward with the next year budgets. And then after that, moving forward, once it's all agree and approved, finalize the budgets, become like a approved budgets. Then every single month moving forward, when you do bookkeeping, you close the money accounting, you compare the revenue of that month compared to what is the budget file and to see like where you make the progression toward your budgets. And then one of the most common errors that I see business owner make in terms of budgeting is when they do for the department and all the program or product launch, they don't carry it forward into the master plan, because in the profit and loss episode I talk about like you have a different time of expense, and one of them is operating expense, which is fixed. It's like rent, it's utility, it's like software, the thing that the cost of doing the business, and there's no way that you can allocate it into like the department or into like the lunch yet. But when you combine it into the master plan, it show up as a part of your budgets and financial report. And if you don't do that, you miss a huge chunk of expense in your budgets. And this is why some of the business that when they launch, it look very good in terms of the budgets of that program. It look like profit. But when they carry together into the master plan of the company in terms of like financial budgets, they have the loss in company, because most of the time your operating expense already costs you around like 30 to 40% of your budget. And so when you carry it in on the program itself, it's make the profits, if it is macro profit 30%. When you carry into the operating expense, it's likely that you make like zero profit at all. So make sure that everything carry into the master plan for the whole company, and that is help you to look overall, and you can see like whether with that budget you make the profit or not. The other common question that people ask about the budgeting, one of them is how much they should budget for the marketing, and I get asked about this all the time. So it actually depends a lot in terms of like industry and in terms of niche and in terms of type of its business too. But normally people spend around 7 to 13 or 12% of their revenue for marketing activity. But then in CPG industry, which is for the consumer product goods, it normally like up to 22 or 23% because it's like consumers need more advertising and marketing activity and all of that. And that's just why it depends a lot in terms of your industry. But normally around like 9% is the average. How much is to pay for the payroll? It also depends a lot in terms of your niche and in terms of your industry too. But normally around like 10 to 30% of your total revenue will go to the payroll and personal expense. And then there's the question is say like what is the difference between like budgets, actual and forecast? And I think this is very confusing. Budgets is something that you plan for the future. It's not going to be applied right now. You can budget for next month, you can budget for next year, you can budget for the next quarter, but it's not right now. So budgeting is a plan for the future according to like your strategy, allocate your resource and how you spend the funding, all of that. For example, you say like, okay, you want to budget $200,000 for marketing activity for next year. That is the budget. But then what is actual? Actual is all the things that are happening right now. As is like, for example, this month or the last 6 months, you spend on the marketing is $60,000. That's the actual number. That is the number that you actually pay out for campaign, marketing consultant, and all of that. And then what is forecasting? Forecasting is the mix between budgets and actual. So, okay, you budget $200,000 for the marketing, but year to date, you already spent $60,000. And based on the market's trend, the way that everything is happening on the markets, you think you will spend another $70,000 for the marketing. So that will be the forecasting. So forecasting is more like up to date in terms of today. And it also like reflects the trend and what is happening on the markets and in your business decision too. And then one of the question people always say is how you can make the budgets is more like flexible and it's not like fixed all the time because of the economy change all the time and the budget that we approved like last year is no longer like make any sense based on whatever is happening right now in the economy. I think that's is basically is a lot in terms of like forecasting. So forecasting reflects a lot of what is happening for the last 6 months, the last 7 months, and what is your forecasting moving forward is number one. That is forecasting. Number two is sometimes when you prepare the budgets, give a range, like for example, you say then the revenue will grow from 20 to 25%, for example, like that. Because based on all the assumption and data that you have, you not gonna be like 100% sure that that is the thing that you can achieve yet. Give the team and the company between a range 20 to 25% that give them the flexibility to adjust to the markets too. Number three is there's the thing they call like just in time, or they say give a upper limitation. Like for example, if you say like you want your operating expense is like 40% of your business revenue, and that is upper limitation. As long as everything changes, they hire more people, they need to open more location, whatever the change that will happen in during the year, as long as it's below that limitation or by that limitation, it's all look great in terms of the budget. So normally in the budgets we normally draft is like most likely, least likely, and the upper limitation. So that is when even you approve for one type of budget, but you know that there is other scenario can happening too, and it's just give us the room and some flexibility because I know what you planned before will never reflect 100% of what will be happening in your business in like next month or in the next 3 months and 6 months at all, because it's so many factors can change it. So I think that is all for the process of budgets and how you apply it into your business situation. I think one of the thing is, as the business owners or like startup, the founder, if your team is smaller, you probably like a part of the process of creating budgets. But normally, like when the team growing bigger, you more on the decision making, and budgeting give you the chance when you have the final budgets. It give you the chance and the direction during the year that will help you to like make the decision and know, okay, you will like have that $200,000 in marketing campaign. It's become like $220,000 marketing is spent. Then it needs to be cut somewhere. So that's help you finally end game of the financial report, like the profit and loss. Is give you the profits because you know every single line of your profit and loss of the whole company. You know that okay, if you increase somewhere, you need to save somewhere, or like more creative solution and strategy that help you to like generate more for that revenue that you lose because it's costs more for you to do marketing, of costs you more to hire additional people. It gave you the flexibility, but it also gave you the framework for you to make the decision. And I think that is one of the best thing because it's clear pictures and direction and framework for you. I hope that this episode is helpful for you and support for you in terms of financial decision. And I cannot wait to meet you in the next couple episodes. Thank you so much for your time today.